I'm Owen Bigland. This is the Inside Edge video blog. I was catching up on some reading this weekend. It was a nice weekend. Had a little time. I have a ton of books and magazines that I have stacked up in my office here. It's been a busy spring market for me, and I've kind of neglected a lot of my reading. I've got about 5 or 6 Fortune and Barron's magazines stacked up here that I haven't been able to get at for a couple of weeks now. But so I always enjoy reading, up on the stock market, reading some, getting back into some of the books that I've bought over the last few months. I go on to Amazon. I've told people I buy a lot of my business books on Amazon used, and I always keep kind of a laundry list of books that I want. Now that we're getting into summertime, I'll go on and buy 6 or 7 books at a time, anywhere between $3 to $6. They're dirt cheap. The shipping cost me more than the book, and I just keep them in my office here for my summertime reading and some of my vacation reading coming up. But there was a quote here that I've read many times, and I know my Buffett aficionados will be able to back me up on this one, but there was a quote that I read in one of the analysts that I follow that covers Apple. Apple is one of my major holdings, so I'm always kind of following what the analysts are saying on Apple and the outlook and the forecasts. But he had a Buffett quote in there saying that, the stock market takes money from the impatient and delivers it back to the patient. The investors that are patient. And this is so true. It's what I've been pounding home for years on my blog here about just staying the course. Don't worry about all this short-term market volatility and bad news that's always out there, especially if you take a company like Apple. It's been volatile lately, Apple, but I just buy, hold, and on corrections, I usually end up topping up a bit more. And I do that with a lot of my holdings. Many of the stocks I'm holding now, with the way the S&P has been roaring here for the last 9 years, are at all-time highs. But when we do get these corrections, like the one we had last month and then the one we had at Christmas, a lot of times if I can get a 10% correction on one of my holdings, I'll buy more. I always keep what we call some cash on the sideline, some dry powder to pick that up. So, this is the same thing with Vancouver Real Estate, and why I know I've done so many blogs on this. I just want to reaffirm to people, comfort them in knowing that when markets turn, which is inevitable, to stay the course, because you need a home, you need a roof over your house, your head. That's first and foremost. And if you're an investor, what the market does this year, next year, or the year after should matter very little to you. You're an investor. You've got a tenant in there. That's why I tell people, I own a lot of real estate. Am I spooked with this market? No. I've been through so many of these, and that's the problem with a lot of these other bloggers that are out there. They're newbies. They haven't been around the block like I have. I've been through so many of these corrections, I've lost count. And this isn't even a correction yet on condos. It's not even close, especially if you look at the new stats that are coming out now from the real estate board. I would say good downtown one-bedroom condos now are off maybe 5 or 6% from their peak price a year ago. And the only reason that is more so with sales volume and the number of buyers that are stepping up. We're not getting those crazy bidding wars that we were getting up until last year. In some cases, we might get a bidding war. I've had a couple recently, but instead of getting 10 offers, I might get 2 or 3 at most. And the offers I am getting, it's kind of crazy. There's like a glass ceiling there. They won't go over asking price, which is typical when you get a market sentiment like we've got now, sales volume or inventory creeping up, and sales volume off 30%. But buy and hold, is the way to go. So listen, the other things that I want to talk, because I get some crazy comments sometimes on my YouTube blog here, as you guys know. You should know that I engage on very few of this stuff. I won't argue with a lot of people on here. Like I've always said, I'm happy to throw my brief little feedback in on the commenters. Sometimes I just don't have the time for it. I try as much as I can to get back to most of the comments, but you have to realize I let my videos do most of the talking here. I'm not going to get back and forth on the merits of timing markets like some of you guys want to get into. Some of you, if you want to time the market and you think the Vancouver real estate market is overheated right now and it's due for a big correction, I totally understand that. You go right ahead. You wait for that magic moment that you think is going to appear. But if you watch the 10 or 12 blogs I've done on this over the last 7 or 8 years, and if you don't want to learn from my experience working with thousands of, hundreds anyways, maybe we're up to over 1,000 clients, on the perils of just buying, or the benefits of buying and holding and not trying to time markets. The magic time will probably never happen for you, because when the market's going down, you're never going to pull the trigger on it because you think tomorrow is just going to bring a better price. You'll never know where a bottom was until after it started to go back up, and then you'll be able to say, yeah, that's where the bottom was. But in the meantime, you're missing out on 2.99% 5-year term mortgage rates. Inventory is pretty decent. You don't have to get into a bidding war. As I said earlier in my blogs this spring, I've had a lot of my savvy, experienced, well-heeled investors buying this past spring, and we've got them what I think to be some good value. We're not stealing these units. You're never getting some crazy bargain basement price off the good condos. You can steal some of the dogs, that are hugging up on a bridge, constant traffic, strata's a mess, and you're going to be paying 30 or 40K in levies in the next 5 years. Those you can get a deal on, but are they worth buying? Instead, just stay the course. People ask me, how do you feel with your portfolio? I'm not selling anything, just like I didn't in 2013, 2008, and all the other corrections before that. I can't imagine where I would be now with the passive income I've got and the lifestyle that I've got, thanks to just buying, systematically buying, not worrying about what the market, if it was a buyer's market, seller's market, or balanced market. I just waited for the right unit to come up. If I could comfortably buy it, put a tenant in it, or live in it as a principal residence, I pulled the trigger on it. Just systematically buy it and took all the guesswork and timing out of it. But if I were to listen to what the media was telling me for the last 30 years, both in the real estate market in Vancouver and in the stock market, I guess I'd have all my money in a coffee can or sitting in a bank account earning me 1%. I'd be spooked on the sidelines forever. And that's what's going to happen to you too, because after this next dark clouds with the tariffs and the Chinese trade and the getting pipelines built and the Mexican tariffs, all the taxes, the empty homes tax, these things are never going to end. There's just another one around the corner. This is life. It's always going to be there. That's why the whole message with my blog here that most other bloggers don't have the ability to put across because they don't have the experience I've got. They haven't been there and done it yet, is to just put your blinders on, stay the course. I'm not selling any of my real estate. As a matter of fact, I'm looking to buy again this year, buy another investment property. My tenants are paying me nice rent checks, taking care of the place for me. I don't have to do anything except pay my property taxes and my maintenance fees every month. And that's the way you should think about it as well. But if you think you're going to get a better market, a better timing opportunity, and you think you can pull the trigger, you've got a strike price and pull the trigger, I talk about it in many other blogs, then I'm all for it. Go for it, and I wish you luck. In some cases, it can work for people. I probably have right now at least 5 or 6 clients, buying side clients that I've fin-tracked, I've met with, but they're not ready to pull the trigger yet. They're keeping an eye on things, and that's totally fine. I have them get in touch with me. They keep an eye on the MLS, and if they see something they like, then they'll let me know, and I'll get more details on it, and we'll go from there. And that is totally fine. What I won't do for these people is keep them on a continuous watch list, because I don't know when they're going to pull the trigger. I'd just be sending them stuff, and it's too time consuming. But I'm totally fine with that. Totally fine with that. Wait. You let me know when you're ready, or if you see something that tickles your fancy, send it to me. I'll let you know, give you some details on it, what they bought it for, tax assessment, all that other stuff. So there's nothing wrong with that. But the final thing I'll say, I saw a few things here I wanted to tell you about. There was an RBC poll done a couple of months ago. And the poll was, do you think now is the time to buy real estate in 2019, or would you be better off waiting? 56% in this RBC poll said better off waiting. There'll be a better time. And hey, they might be right. But you know, the funny thing I want to point to people is this poll's been around for a while, and I can tell you 2 or 3 years ago, that was up at 72%. So I think that kind of tells you something there, that maybe people are getting a little smarter now. Maybe they're listening to me, maybe they're listening to a guy like Warren Buffett. There's other bloggers out there that are just saying, you know, when you have the money to buy and can afford to comfortably buy your principal residence, then stop renting and buy the damn thing. And don't worry about what the market does in the short term. Take advantage of that principal residence exemption. But I understand the 56% that probably think, hey, maybe there's a better time. And they'll wait. When you're ready, give me a call. I'll fin track you, meet you for a cup of coffee, and we can keep an eye on things that are in your budget. But keep in mind too, though, the market rate now for condos has been pretty resilient. There's been very little come off the price on the good units, 5-6% at most. And most of that is, in my opinion, is because of that stress test. It's gotten much more difficult, you know, to qualify for a mortgage, and you've had to qualify at a 2% better rate. The final thing I'll say to the people as well, just so you know here, when you're on the sidelines and waiting for the market to drop and you want to get in a better opportunity, it's totally fine. But you need to understand what that's doing to your mental outlook and your mental psyche. I see some of these comments, not just on my blog, but some of these other ones. And, you know, you can tell that these people are frustrated, and I can understand it. They're angry. They feel like somehow something has been taken away from them, that they had, you know, it was their right to live in Yaletown, and now they can't afford it. Again, it's that mirror test that I always talk about. They don't want to own up to it. But instead, the funny thing is that many of them spend hours upon hours upon hours every week complaining. There's a guy on Twitter that must spend 20 or 30 hours a week going through the MLS and posting examples of detached homes that are selling for $1 million or $1.5 million below their unrealistic asking price. If that guy channeled some of that energy into something more positive, like maybe improving his knowledge level and getting better at his career, or getting a side hustle, or learning about investing, saving his money, taking that 30 hours he's spending complaining and put it into something more tangible, more optimistic, you'd probably be a lot better off in a year or two from now. You wouldn't have to be posting this propaganda. You know, the other thing on these guys is, a lot of people say on my blog here that, oh, you're a realtor and you're pumping the market and you have to keep your business going. Well, you know, of course, if you've read my book, and people that know me know that that's absolutely not the case. I have no biases whatsoever. These things, that the taxes and the economy, and they're not going to impact my business whatsoever. None. I've got all the business I need and then some. Because people know, if you're interested now, you know, in buying, give me a call. If you want to buy out in the Fraser Valley or Surrey or Port Coquitlam, I will put you into one of my team members, an experienced realtor that's on par, I think, close to myself, experience-wise. But I'm really only handling now a lot of stuff just in Vancouver, a little bit in Richmond, more on the listing side, of course, and I can only take on so many buyers. So this is not gonna, me pumping the tires is not gonna make any difference on my business. The other thing too is that no one individual, these guys that are pumping out all this stuff on Twitter, do they actually think that they're gonna have any influence whatsoever on a $200 or $300 billion annual market? You're not. Nobody cares. I could have 1 million followers on my YouTube channel here, and I still would have no influence over this market. Nobody is bigger than this market. This is the major leagues. This is hundreds of billions of dollars annually. So why waste your time with this stuff, cherry picking this negative data? Nobody cares, and you're going to have zero impact on this market, because that's why they're doing it. I know, I can understand their frustration. They want this market to come down, and they think maybe if I throw out all this negative stuff, it'll help bring down the market. Well, the market will get brought down on its own. It'll get brought down for the many reasons I've said. Markets don't go up forever. Eventually they run out of steam, and we need a correction. It's normal, and I actually look forward to them. You need that balancing out, that softening a bit, to reset the stage for the next leg up. It's natural. Buyer fatigue is a huge one. We've had such a run here with bidding wars that you need a natural break. The stress test, the 3 or 4 quarter-point interest rate hikes we've had in the last 18 months. These are all things that are going to cool the market, which they have as far as sales volume go. But you tweeting about a detached house in West Vancouver that was listed for $4 million and ends up selling for $3 million, it's not going to make any difference to the market. Nobody cares. You're just wasting your time. Channel that energy into something more productive. Focus on yourself. Don't point fingers. The other thing is, these people, I don't know if they know what they're doing to their mental psyche. I don't think they do, because if they did, they would quit. They'd stop it. They should read books by a guy, I think a lot of people know, Eckhart Tolle. The Power of Now. Some of these books where you need to have, people don't realize that if you're going through life complaining and wanting something negative to happen, the stock market, because I follow these financial guys too, these short sellers, some of these guys that you'll see. These guys, some of them are they've got issues. I don't think they know the damage they're doing. Life reflects back to you. It's like a mirror. So if you're putting out all this negative energy and you want negative things to happen, you want the S&P 500 to crash, you're all for a tariff war, a trade war, bring down the stock market, hike up interest rates. You want the Vancouver real estate market to plummet 50% so you can buy in, and you're going to post all the cherry-picked data you can to try and make it look like that's going to happen. If you're going through life like that, you're probably wondering why things have gone wrong for you. Well, I can tell you why they've gone wrong for you, because you're putting out this negative energy, and life is like a mirror. You put out negative energy, it's going to get reflected right back to you. People are going to give you that same dose of negative energy straight back. I'm trying to help you here. You complaining and cherry-picking data is not going to help the situation. Get over it. This is normal. This slowdown in sales I've been talking about for 3 or 4 years now. The small correction we've had on condo prices I've been predicting for many years. Detached market is really the only market that's really been hit. But even now, with these new stats coming out, there's early signs maybe that the worst is over. Things are starting to level off now. Stay tuned for some more updates on that later this summer. But I'm kind of thinking it's showing signs of life again now. So going through life with that, with wanting something negative to happen, it's not a good way to be. Like I've always said here, your attitude is everything in life. And I know, again, I speak to the converted here. Thank you for following me. I know you guys, it's positive affirmation. I like to get it from other people myself too, to stay the course. You're doing the right thing. But I'm always trying to convert some people over from the dark side, and I always do. Not a month goes by when I don't get some people that said, I've watched your blogs and you've, converted me over. I'm thinking things in a little bit different way. I'm taking things into my own hands, which is what you've got to do. Nobody else is going to help you. Positive attitude. Buy, hold, enjoy your life, get better at your career, keep saving your money, taking some of that money, putting it into assets that will pay you, not only pay you to hold them, but will, of course, appreciate in the long term. Real estate and stocks are the 2 best ways. For most people, just buy an index fund. Buy the S&P 500. Keep pumping money into it every month. And down the road, if you can afford it comfortably, the final step would be to buy an investment property. Buy a 1-bedroom unit, put a tenant in it, let the tenant pay down the mortgage in 20 or 25 years, and then have a look at it, sell it and retire, or whatever you want to do. I'm Owen Bigland. As always, thanks for watching. If you haven't subscribed to my YouTube channel, please do. I'll see you next week.